In this lesson, I would like to go through the trend trade rules with you. Now, the first rule in a trend trade is going to be location of our small triggers relative to our synthetic triggers. In the rules, you'll see again our small triggers above or below our synthetic triggers. Now, if you're using a larger chart, you may only be using one synthetic trigger. If you're using a smaller chart, you may be using two synthetic triggers. So what I want to do is I want to take a look at what it actually looks like when you have your small triggers above or below your synthetic triggers, so you're very clear on that concept. So you'll see here in the highlighted area, our small trigger lines physically get above both sets of our synthetic triggers. So not only are we breaking the red lines of resistance, but our small triggers are going up strong and they're above both of our synthetic triggers. That's what we're looking for. Now, once we have the proper trigger line configuration, we're going to have to decide where the area to trade from is. Obviously, if we get a combination of our Fibonacci areas along with a mid-band or a 165 EMA and synthetic triggers all in a relatively tight spot, that's going to be the best area for us. And we also would like to see our fib to fib oscillator at 25 for a buy line or 75 for a sell line. So let's take a look at a chart. So as we look at the spot, you can see our fib to fib oscillators at the 25 buy line. We've got a very tight grouping of Fibonacci support, 165 EMA, and our mid-band all in the same area. So we've got a very well-defined area where if we place our stop below our last synthetic trigger, we're able to get in a little more assertively at that spot instead of waiting for a turn. So again, in going through the rules, we want our small triggers above or below our synthetic triggers, in this case above. We want our synthetic triggers crossed in our favor. We want our small triggers to remain above the lowest synthetic trigger crossed in our favor. Obviously, if it gets below it, that's an exception, and we can deal with exceptions in the classroom. So I'd like to do just best trend trades here. We've defined our area where we want to trade with our Fibonacci support and our moving averages and our synthetic triggers. We've defined our fib to fib oscillator being at the 25 buy line, at least for a buy signal. Now, if the market violates these areas, we don't want to get in. We also, if we have a very strong move in our small triggers to get to that area, which we didn't, we're going to delay the trade a little bit. Now, we also want to, before we get into the trade, make sure that the market is not coming down to our entry spot from our target area. If it's coming from our target area, we don't want to actually use that. So we want to make sure also that we've got room to our next target. So if we look at, obviously the picture, we've got plenty of room to get to our next Fibonacci target way up there at 42.26. So again, putting the rules together. Market starting a move from multiple time frame support, breaking resistance, small triggers above our synthetics, pulling back into the area for a long, and looking to the next Fibonacci resistance as our profit target. This is the perfect trend trade to the long side, using Fibonacci support, all of our trigger lines, and using Fibonacci resistance as the ultimate target for this trade. All right, so now let's take a look at a larger time frame chart. Notice this is a 14-2 chart, and we're going to use the same exact rules when we're looking at a large chart for a trend trade as we do our smaller chart. So the first rule is small triggers below our synthetic triggers. The next rule is find our area to trade from, so you can see very clearly 3 time frames of multiple time frame resistance. We've got our mid bands and our 165 all falling into a very tight area. And we've got our fib to fib oscillator at least the 75 sell line. So we've got the direction. We've got our synthetic triggers crossed down. Our small triggers were below our synthetic triggers. We've got a perfect area and our fib to fib oscillators ready to go. So this is a good look for trend trade short. And the reason we want to recognize trend trade shorts on a larger chart or trend trade longs, these are the areas where we have a ultra high probability of winning counter trend trades on a smaller time frame chart. So if we're trading back up into this resistance area, which would be a trend trade on our larger chart, we're going to also look for reasons on our smaller chart to enter at that spot. So we really get the benefit of having both the smaller chart with Fibonacci areas and the overall look of a trend trade on the large chart when we're attempting to do counter trend trades on our smaller time frame chart. So again, the trend trade is a vital component for trading long or short with Fibonacci areas with the trend. But if you use a larger time frame chart, that look also becomes instrumental in counter trend trades on your short chart. All right, so while we're here, let's take a look at our counter trend trade rules. And again, we've been discussing the trend trade, and I want you to see how the trend trade fits in with our counter trend trading rules. So I'm going to expand the charts just a little bit. And just to kind of read through the first rule, no trigger lines break through Fibonacci areas. That's really a must. If we have Fibonacci areas that are broken by trigger lines, we're going to have to wait for the trigger lines to get back on the correct side of that Fibonacci area. So when we're looking to establish a counter trend trade on a smaller chart, the best look that you can get is a trend trade short look on your larger chart, just like the one that we just looked at. So when we have a high probability trend trade look on our large chart, we can be much more aggressive, assertive, however you like to term it, at that area looking for a short trade. Now again, when we're looking for counter trend trades, at the Fibonacci area is always best. So we have to do a really good job of defining exactly where we're going to take these counter trend trades. Also, if you've got the trend trade Fib oscillator on your large chart, if you have divergence on the small chart, that's favorable. And like every trade, again, if our areas get violated, we want to wait until the trigger lines roll back on the correct side of our Fibonacci area. So let's take a look at a chart of a counter trend trade. All right, so we're going to take a look at the same area, 14-2 chart. Obviously a very good look that really fits perfectly into the best trend trade short look for a larger chart. Small triggers down below our synthetics, pull back into multiple time frame resistance and a 165 EMA. Our fib to fib oscillators at the 75 sell line. So we've really got a bullseye, if you will, at our Fibonacci support and resistance areas where we're going to be looking for that trend trade short to happen. Now when we look at our 5-1 chart, you'll see that we've also got Fibonacci resistance at exactly 41.33. So whenever we have an overlap of a perfect trend trade short on the large chart, Fibonacci resistance on the smaller time frame chart, this sets you up for the perfect counter trend trade, and I guess that's kind of semantics, right? It's a trend trade on the 14-2 chart and a counter trend trade at the exact same spot without our trigger lines breaking through on the big chart or the small chart through the Fibonacci area. So these are the types of looks where you want to be a little bit more aggressive or assertive, if you will, at those spots so you can get in very close to the 41, 32, 33 area. This will give you maximum benefit with the least amount of risk. All right, so we're now going to deal with the exception to the trend trade. And the exception is when your small triggers are on the wrong side of your synthetic triggers, but your synthetic triggers are still crossed in the trend direction. Now, the best look that you can get is when you have your large chart, if you use two charts, have a what we call a stab back look. And all that is just a retracement without making a reversal bar on the larger chart. And if you can add to it an area of support or resistance on the larger chart, that makes things a little bit better. Like any type of trading, there's always exceptions. And really my focus here is to get you the absolute best exception using multiple time frame charts. As you spend time with the software, you may add a couple of other exceptions, but if you really focus in on what we've talked about and this exception, you're going to really have the best chances of doing very well starting off. So let's take a look at the chart. And I'd really like to focus in on this section. So, what we're looking for on the large chart to help us out is a very wide, small trigger to the upside or downside as the direction dictates, well above your synthetic triggers, and the market to actually pull back and make a tail without making a down bar. And that's why we use the reversal bar marker on your chart, so you'll know exactly where that down bar is going to come from. So we want to pull back to the support line on our larger chart with our small triggers above us and going strong up. And this is the best look that we can use for a trend trade exception. Now, when we look at our smaller 5-1 chart, you'll see the market broke resistance, very strong triggers above the resistance, and the market pulled back to the mid-band, which is usually mid-band or fibs is the spot where you're looking for this exception trend trade to happen. Now keep in mind, the synthetic trigger, the large one on the 5-1 chart, is the small trigger on the 14-2 chart. So you can use the synthetic trigger on your 5-1 chart as a visual clue. If it's still going sideways, which means you're putting in a retracement on the larger chart, and hasn't pinched or rolled against you, you can continue to take trend trades as long as you've got plenty of room to your target and you're doing so from a key support area. So this is a really good look for our trend trade exception. So when you put both charts together, you're able to really take a look at a strong push on your larger chart, the stab back to your mid-band or close to your mid-band on your larger chart, and then a break of resistance, very strong triggers going up on your small chart, and the exception, trend trade exception on your small chart to get you up to the next Fibonacci resistance. So we'll take one more example look, and you can see pretty clear to see, obviously, after the fact. I want you guys to be able to see this as it's happening. Very wide, small triggers to the downside on our large chart, well below our Fibonacci area, well below the synthetic triggers, everything below Fibonacci support. Price pulls back to the bottom of support, which is going to eventually turn into resistance on the large chart. And this is where we get a little bit further. This is almost a counter trend trade look on our smaller chart. The only reason I say it's counter trend trade is because our fib to fib oscillator has gone a little bit too far on the smaller chart. But with this stab back look on the larger chart, you can again continue to take trades in the downward trend direction. And not only do you get to the Fibonacci support, but obviously with the larger chart, you can see there was almost 50-60 ticks between the 40-80 area and down to the 40-25 area. So a lot of really good potential for counter trend trading or trend trading when you've got a very strong stab back look on your large chart. So if you focus in on everything that we've said in this video, trend trades, counter trend trades when you've got a larger chart trend trade look, and stab back looks on your large chart for your exceptions to your trend trades, you're going to have a really complete arsenal that once you understand a couple of the small nuances, you're going to really have a very, very solid plan. So thanks for your time and look forward to seeing you in our educational room.